Good day, ladies and gentlemen. This is the recording on the topic of general ledger accounts that I will be doing today. Simple ledger accounts for the subject called accounting. I have an example that I will be recording using it with a total of 30 marks for this question. If you look at this exercise, we are given some information where it says the following balances were taken from the books of Mida Stores on the 1st of May 2023. So the name of the store is Mida Store. We don't know yet what Mida Store does. Sometimes it becomes important to know. Sometimes it's not important to know. You can still record without the full knowledge of what the entity does. We are provided with the information regarding capital contribution or capital, land and building, drawings, equipment, bank with a debit balance. The DR means is a debit balance. That means we have money in the bank account. We have services rendered, trading license, water and electricity, consumables, rent income. So now these are the this is the information that is provided on our disposal. Then now we are given transactions that we must record. It says transactions for the month. We have this transaction for the month, and we have the first transaction up until the last transaction. But I prefer that we first read what we are required to do. We are required to enter the opening balances. If they say the opening balances, they are referring to the information that is given on the table. This is the information that is available on the 1st of May 2023, which is the beginning of the accounting period. So this is the opening balance, money or balance that we have in the capital account at the beginning of the period of the business. Either it can be a month or it can be a year. Then after we have land and building, we have drawings, we have equipment, all of them. These are the opening balances. But very importantly, for us to first record these opening balances, we need to know if these accounts that are listed in here, which side are they increasing? Are they increasing on the debit side or are they increasing on the credit side? Each of them you need to know. Now, the minute you know which side each account is increasing, then it will be easier for you to record to the relevant ledger account in terms of the opening balance. So now that is the step one based on the first requirement, where we are required to record the opening balances. That is the first step we do. Look at the capital. You ask yourself, which side does capital increase? It increases on the credit side. So your opening balance will be recorded on the side the account is increasing. Then after, we are required to enter the transactions in the general ledger. Previously, we were required to enter the opening balances, not the transactions. So now the transactions are the one that are here. There is your heading, transactions. That means from the above, they could have said or mentioned that these are the opening balances on the 1st of May 2023. But now we know that these are the opening balances and these are the transactions. So for each of the opening balance, we will open a ledger account. For each of the opening balances, we will open a ledger account. Then after the ledger accounts are done for the opening balances, then after we record the transactions that are given to us from transaction number 4 up until transaction date number 30th of the month, which is the month of May. So now let us start with our recording of the opening balance, entering the opening balance. Now remember, we are doing ledger accounts. So now because we are doing ledger accounts, then we start now. We use what is called T account. That's what a ledger account is. It is what we call T account. So for each of the opening balance, we will have a T account. First T account that we say in the opening balance, it is capital. Then after we will say capital here on top. This is an account. We know that capital increases on the credit side and it decreases on the debit side. So if capital is increasing on the credit side, as I mentioned before, it means the opening balance of capital will be recorded on the side the capital account is increasing. I mentioned that capital is increasing on the credit side, therefore the opening balance will be recorded on the credit side. Then after we say opening balance, we say opening balance. Or else we have the terminology in accounting that says balance brought forward. You can just use that or say opening balance. Then we check how much is the opening balance for capital. It is 340,000 rands. We write that 340,000 rands. This is a tick, a mark going to your mark box. Then we are done with the opening balance of capital. In terms of the space, it differs from one account. You can leave 3, but when it comes to the bank account always leave a bigger space. There will normally be many transactions in the bank account. Capital is likely to be one capital contribution that will happen in the current month or in the current period. So 1-2 lines will be enough. Then we go to the next opening balance, land and building. Land and building is 240,000. First of all, we ask ourselves, what is land and building? Land and building is an asset, and assets increase on which side? On the debit side. So that means the opening balance of land and building as an asset will be recorded on the debit side of the ledger account called land and building. So we open a ledger account for land and building. Then we say land and buildings. We draw the line of the ledger account or T account. It does not matter which word you use. Ledger account and T account is one and the same thing. Land and building is an asset. It increases on the debit side and it decreases on the credit side. As I mentioned, that opening balances are recorded on the side the account is increasing. Land and building is increasing on the debit side. So we have 220,000 rands. This is our balance. You can say opening balance, or you can just say balance brought down or balance brought forward. So we have recorded the opening balance for land. It's very unlikely that we'll buy another land. One line might be sufficient, or we might buy a building. A building, we normally buy it once and it stays there for long, unless we want to expand our business. Drawing, we know that drawing is under equity, and drawing increases on the debit side, 1,500. Drawings increases on the debit side. So we open the ledger account for drawings. and we record the opening balance of drawings. On the side, drawings are increasing, and drawings increase on the debit side. Drawings increase on the debit side, and they decrease on the credit side. But we record on the side the account is increasing. Opening balance is recorded on the side the account is increasing. So now we record 1,500. Then we have our balance brought forward. Balance brought forward. So that is our recordings of the opening balance. Something that I normally forget whenever I do ledger accounts is the dates. But I would like to remind you that you write a date before you say balance. You state the date that the transaction took place. Before the word balance, you write the date. But in this case, is the beginning of the month. But when I record the transactions, I'll be recording the date. Now we go to another ledger account called equipment. What type of account is equipment? We know that equipment is an asset. We said drawings is owner's equity and is increasing on the debit side. It's increasing on the debit side. We know that all assets, they increase on the debit side. 45,000 is the amount of the opening balance for equipment. So we open a ledger account for equipment. We open a ledger account for equipment. We open ledger account for equipment because equipment is an asset, and assets increase on the debit side, meaning on the left hand side. So the amount of the equipment which is recorded to be 45,000 will be recorded on the debit side as 45,000 rands. Description is balance. Balance brought forward. Then we go to the next page. We are likely to buy maybe one equipment, then after we are done. On the next page, we go again to another account. Bank account with a debit balance. They tell you under bank, debit balance. That means bank can have a credit balance. So now we have our bank 194,160. That is our bank opening balance. We open a ledger account for bank. We draw the line because we are doing what is called a T account, where everything that is related to bank will be recorded in here. Then we have balance. This is balance brought forward. This is money we had in the previous period or in the previous month. We carry it in the following month. It was 194,160. 194,160. Let me just verify that. Yes, 194,160 on the left hand side, meaning on the debit side, because bank is increasing on the left hand side or debit side as an asset. Services rendered, opening balance 150,000. We know that services rendered is income, and we know that incomes increase on the credit side. So this opening balance will be recorded on the credit side of the services rendered. Services rendered. We have our services rendered as a ledger account. We draw the T account line. Then we have our balance on the right hand side, which is the credit side. This is where incomes are increasing plus your capital. We rendered services amounting to 150,000 previous period. 150,000 rands. Remember, we always record the opening balance on the side the account is increasing. we always record the opening balance on the side the account is increasing. Then now we have our debit side where services rendered are decreasing. Then we go to the next ledger account or the next opening balance. And I don't know why this thing is popping up. Now we go to the next account, trading license. This is the amount we have paid for trading, which is an expense, 1,540. A license we pay in order for our business to continue trading. That will be an expense increasing on the debit side, trading license. Now we draw a ledger account for trading license increasing on the debit side. Or even if one can classify it as an expense, it will still be on the debit side. That will be 1,540. 1,540. This is the balance of the trading license, balance brought forward. Again, this is an expense increasing on the debit side, decreasing on the credit side. As I mentioned, just to repeat, we are recording balances on the side the account is increasing. Now, water and electricity, we know that water and electricity is an expense. We are paying for water and electricity in order for our business to continue operating. So water and electricity is an expense. Expense increases on the debit side. So the opening balance will be recorded on the side and expense is increasing, which is debit side. Then after we have our ledger account for water and electricity. Water plus electricity. Then we draw the line for the ledger account or T account called water and electricity. We said the 2,000, I think it's 2,800. 2,800 will be recorded on the debit side because water and electricity is an expense and expenses increasing on the debit side. So we always record the opening balances on the side the account is increasing. Just forgot this one to say balance. This is our opening balance, balance brought forward, or you can say opening balance. That is still acceptable. Brought forward means it comes from the previous year and it was brought into the current year or current month. Consumables, 25,000 rands. Consumables, 25,000 rands. So we open a ledger account for consumables. Consumables increase on the debit side. Consumables increase on the debit side and they decrease on the credit side. Either we classify consumables as asset or expense, but they will still be recorded increasing. In other words, on the debit side, 25,000 rands is the amount. We have 25,000 rands. This is our opening balance or our balance brought forward, balance coming from the previous period. So we have recorded the consumables. Consumables will always be increasing on the debit side. Then we have rent income, which is rent income of 40,000 rands. We know that income is an income. They told us that this is an income. Now incomes, we know that incomes increase on the credit side, same as our consumables. So the same as our services rendered, which we classified there as income, and it was correct. So if incomes increase on the credit side, that means rent income opening balance will be recorded on the credit side. Then we have our rent income of 40,000 rands. Rent income of 40,000 rands. This is our balance, or our opening balance, or balance brought forward. The BF is brought forward. So we have responded to the first requirement. The first requirement instructed us to enter the opening balances in the ledger account, and we have done that. Remember, for your recording of these opening balances, you are getting marks for your recording. Accurately recording in the description, you are getting marks. Imagine how many marks you have there: 5, 6, 7 out of 30 marks, 8, 9, 10. We already have 10 marks in the box out of 30 marks of this question. So please make sure that you grab these marks as much as you can from the opening balance. If you were to be asked a question of this nature, where you are given the opening balances and you are to record the opening balances. Then now we have recorded the opening balances. Now the next requirement is to enter the above transactions. Now what are we entering? We are entering the transactions now in the general ledger. What are the transactions? Here are the transactions that we are entering: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only 10 transactions that we are entering in here. Now we then continue now in response to the transactions that we are required to enter. The first one, which is date number 4 of the month of May, says the owner contributed a further, take note, a further. That means the owner contributed again. Why are we saying again or further? It's because previously the owner contributed something and it was kept in the books of the business. And we have seen that, oh, the owner contributed before, maybe last year or 2 years back or last month or whatever the period is. And now in the month where we are recording, the owner is contributing further or is contributing again. So now that means this is another capital contribution that must be added to that 340,000 rands. Remember, we are doing ledger account, so we must do it from the ledger account point of view. What did the owner contribute? It was 120,000 that he contributed, and 120 was cash and a new laptop with a cost of 40,000 in the business. We know that a laptop is classified as equipment. It is the equipment that will be used in the business. A laptop will be classified as equipment that will be used in the business. So now that means in this case, we are to record two things. We are to record capital contribution of 120,000 cash, and we are to record 40,000, which is equipment. But where are we recording these two? We are recording them all under capital contribution or under capital account. So now in our capital, we need to record cash of 120,000 and 40,000 of equipment. So now let us come to the ledger account. First question, do we have capital contribution as a ledger account? The answer is yes. So now we are increasing. Remember, capital contribution is increasing on the credit side. So we are increasing our capital contribution because the owner increased the capital contribution. So for us to increase capital contribution, we must record on the credit side, because that is where the capital contribution is increased, 120,000. Now we have recorded 120,000, which is on the plus side. We are increasing. How was this 120,000? In what form was it? This 120,000 is in the form of cash. This 120,000 is in the form of cash. In accounting, cash, we call it bank. So we are saying the capital increased by how much? 120,000. For how was it increased? It was in the form of cash. So that becomes a description. Then now, for every debit entry, there should be a credit entry. Remember that in accounting. So now, because we have cash, remember this is an account which is called the bank. Now let me just remove the cash, but I just wanted to clarify when they say cash, we are referring to bank. So now the next question will be, we can first say we have recorded in the capital. Now we need to record in the bank account. This is the capital ledger account. Now we need to go to the bank account ledger account and record capital as an explanation. Now we go to check if do we have a bank account. Yes, there is bank. Now what happened in our bank account when the owner contributed money? Obviously, if the owner contributed cash, that means something must have happened in our bank account. The company received money from the owner. So now because we received money from the owner, therefore let us increase our bank account by 120,000 rands. Remember, the owner gave 120,000 as cash to the business. The owner gave 120,000 as cash to the business. So that means the bank account of the business must increase by the amount the business has received. And the business has received 120,000 rands. So now under the bank account, we need to record 120,000 and we are increasing our bank account by 120,000. But the question will be, why are we increasing this bank account? Where is this money coming from? This money was a capital that was contributed by the owner. Therefore, hence your description will be capital contribution. Remember, we say in accounting, for every credit entry, there on the credit side of capital, we have bank. That means on the debit side of bank, we must have capital. That is exactly what we did. On the debit side of bank, what do we have? We have capital as a description. The amount is the same. It is 120,000 rands. So we would have recorded this one correctly. For every debit entry, there is a credit entry. Then we go to the next transaction. Remember, for every transaction, there must be a double recording. Debit and credit. In some transactions, you might need to record 4 times, like in this case. So now we come to the second part, which is a laptop that was also contributed with a value of how much? 40,000. Remember, this 40,000 is not cash. There is no bank affected here because the laptop is not money. The owner gave the business a laptop. So now if the business received the laptop, cash will not be affected. Bank will not be affected because the business did not receive money, but it received equipment with a value of 40,000 rands. So now we have highlighted that laptop is equipment. We have highlighted that laptop is equipment. Now that we have highlighted that laptop is equipment, then we can then now record the equipment and also the capital contribution. Now we are again starting under our capital contribution. We are saying the owner also contributed 40,000 rands. The owner also contributed 40,000. But the contribution of 40,000 was in the form of equipment. From here, I am sure there will not be any further capital contribution that will be done. So now we say, if now capital contribution is increasing by 40,000, is increasing because equipment was contributed. So now that means under the equipment account, now we need to say, do we have an account called equipment? If yes, we do have account called equipment. On the debit side of equipment, we need to record 40,000 rands and the description will be capital. There we do have equipment. Now we are saying the business received 40,000 rands. For every credit entry, there must be a debit entry. Meaning on the debit side of equipment, we are going to record capital. In other words, we are saying we have more equipment. Where is more? More is a plus on the debit side. That is where equipment increases. So we have more equipment. Why are we having more equipment? Is because of capital that was contributed by the owner. That means the owner contributed equipment. So that will be under our capital contribution. For every debit entry, there is a credit entry. Or for every credit entry, there should be a debit entry. Now we have recorded the first transaction and we are done with it completely. Recorded it in both sides. The next one is paid 1,550 for telephone bill. We paid. If it says paid, obviously we know that cash is affected. And cash in accounting is an account called bank. Please don't use the word cash. I'm just using it because sometimes we use it. Sometimes they must say used EFT. If we have the term EFT, we know that EFT is bank. We transferred money using electronic fund transfer. So EFT is your bank account. Just be mindful of that. Also, it's another terminology we normally use in terms of accounting terminology. EFT is bank. In this case, we paid. What did we pay? We pay for a telephone bill. What is telephone? Telephone is an expense. So there are two accounts affected here. We have an expense, which is telephone. Another one, we have bank, because we paid. If we pay, your bank is affected. We know that bank is an asset. And assets increase on the debit side and they decrease on the credit side. We have an expense. Guys, I want to emphasize this. Whenever an expense is affected in the ledger account, it will always be increasing on the debit side. Either you pay or you incur or you don't pay. If it is an expense, expense will always be recorded on the debit side. Now let us check if do we have a telephone account in our ledger accounts before we record. I don't remember us having any telephone account. No, we don't have telephone. So let us open a ledger account for telephone. Let us open a ledger account for telephone. And we know that telephone is an expense. We know that telephone is an expense. So we draw a ledger account. Whenever you have not opened yet the ledger account, always open it. Expense of telephone is 1,540. So on the debit side, we say 1,540. Why is our telephone increasing? Is because we paid for it. There is bank. When it comes to expenses, you will always record them on the debit side. Not sometimes. You will always record expenses on the debit side. More especially for the basic accounting. Expenses will never decrease on the credit side. We just do the basics. So we have recorded under the telephone account. We are saying that telephone is increasing by 1,540. Now let us go to the bank account. Remember, we paid. So if we paid, our money must decrease 1,540. If we paid, the bank must decrease. And bank decreases on which side? On the credit side. So now that means because bank is decreasing, the question will be, what is making our bank to decrease? Is because we paid money for the telephone account. We paid money for the telephone account. So that is why now bank will be decreasing, because of the money that went out of the business paying for the telephone account that we have, or the telephone bill that we have. As I mentioned, that we can say EFT. EFT means money went out using electronic fund transfer. Again, another EFT or another paid. How much did we pay? We paid 1,200. Let me just do a shortcut. We paid 1,200. If we paid 1,200, very simple, under your bank account, you know that 1,200 is there. Then now what will be the description here? We need to check, what did we pay? We paid 1,200. That means our money in the bank will decrease, and our money in the bank is decreasing on the credit side of the bank account. Then now, what did we pay? We paid for water and electricity. Therefore, that becomes your description to say our bank is decreasing. Why is bank decreasing? Is because money went to water and electricity. Water and electricity. Now, we need to record under the water and electricity account, or under the water and electricity ledger account. Do we have a ledger account called water and electricity? Yes, we do have it. As I mentioned, that when it comes to expenses, you will always be recording on the debit side. That is 1,200. Our water and electricity are increasing on the debit side. Why? Because we paid for them. So in this case, as I have been emphasizing, expense in the ledger account will always be recording on the debit side of it. Don't ever record on the credit side of the expense. I'm referring to the basic accounting students. Always on the debit side. We don't do correction of error in here. We don't do closing entries. So it will always be on the debit side. When it comes to your water, electricity, rent expense, if it's an expense. And when it comes to your incomes, you will always be recording on the credit side of them. Same as your capital contribution, always on the credit side. Same as your drawings, you will always be recording on the debit side of that ledger account. So now we have recorded this both sides, under the bank account and also under water and electricity account. So in other words, the paid one is a bank. This is another account, water and electricity, and we recorded in both of them. Similarly with the previous one, this part that said paid means bank, and we recorded under bank account, and this one is telephone, and we know that telephone is an expense, and we recorded on the debit side of the telephone, but we recorded this on the credit side because money was going out of the bank. Now that also another two entry that we recorded. We now go to number 14. We bought consumables. If you buy something, guys, it will always increase, and whatever you buy will always be increasing on the left hand side. Whatever you buy will always be increasing on the left hand side, meaning on the debit side. Now in this case, we bought consumables. Now the fact that we bought consumables, I ignored this so far. I just erased that. I bought consumables. How much did I buy them for? 3,500. Then because I bought consumables, I am expecting that consumables should be increasing. Consumables should be increasing by 3,500. Consumables should be increasing on the debit side, 3,500. That's it. Consumables must increase on the debit side. Then after, I ask myself, how did I buy these consumables? Was it cash or was it credit? If it's cash, then I will record bank here as an explanation if I bought them cash. If it's credit, then I'll need to record here creditors or creditors control. But let us check if how did we buy the consumables. Let us check. How did we buy them? We bought them on credit. If you buy something on credit, that means now you have a creditors control, meaning a liability. Therefore, now the description here will say creditors control. It will say creditors control because we bought on credit. It will be creditors control. So now we need to open a ledger account called creditors control. And if you were to note, we did not have a creditors control under our opening balances. We did not have creditors control under our opening balances. But it's another account that can also be here. You can have another balance that says creditors control. Then whatever X amount would have been recorded. So if we did have an opening balance, we were going to record that opening balance of creditors control in the ledger account, but we don't have it. Remember, creditors control increases on the credit side because it's a liability. So now we did not have the opening balance, meaning we need to open the opening balance. We need to record the ledger account. Then we are opening the ledger account called creditors control because it's the first time we are experiencing a transaction that has creditors control or recording. Creditors control are liabilities. People we are owing the money, they are increasing on the credit side. So because we bought more on credit, that means people that we are owing the money because of what we bought will increase on the credit side. And why are they increasing? Because we bought consumables on credit. So our creditors will increase because we bought consumables on credit. At the same time, consumables are increasing on the debit side because we have more consumables, but the consumables were bought on credit. So that will be for every debit entry, there should be a credit entry. For every debit entry, just to zoom it in, for every debit entry, there should be a credit entry. Please guys, memorize the ledger account and master the principle of ledger accounts. It will never change. It's always simple as is. It will never be complex at any point in time. Now we have recorded number 14. We are going to number 15. Number 19. Now it says the owner took consumables. If the owner takes something, this is called drawings. The owner took. If the owner takes something, this is called drawings. Then the second question is, what did the owner take? The owner took consumables. The owner took consumables. Obviously, consumables will have to decrease in this case. Why? Because the owner took consumables. We need now to have less consumables because the owner took more consumables. How much was the value of these consumables? It is 2,000 rands. Then now we go and we open a ledger account called drawings if it was not opened yet. Let us check if do we have a ledger account called drawings. Check if yes, we do have drawings. If the owner took something, drawings always increase. 2,000 rands. Why drawings are increasing? Whenever the owner takes something, drawings are increasing on the debit side. This is another account that will always be increasing on the debit side. The drawings, meaning what the owner has taken, is increasing because the owner took consumables. So there is more that the owner has taken, and that more the owner has taken is called consumables. Now, because the owner has taken, now I think we already understand for every debit entry, there should be a credit entry. That means this 2,000 will be recorded on the credit side of consumables, and the description will be drawings. This 2,000 will be recorded on the credit side of consumables, and the description will be drawings. So now obviously, meaning the credit side of consumables is the side where consumables are decreasing. Let us go and check if do we have a ledger account for consumables. I think we do have, yes. The credit side of consumables is where consumables are decreasing. Obviously, the owner took some consumables worth 2,000, and we are expecting consumables to decrease because the owner took consumables. So that's why now it's on the credit side. So the theory must be the same as the practical. If the owner takes something, we expect what the owner take to decrease. And the decreasing side of consumables is the credit side. So now why consumables are decreasing is because the owner took, if we are to simplify, because the owner took, this is the description, because the owner took consumables. But we don't do those details, we just say drawings. But the word drawings means the owner took something for private use. That's very important. The owner took something for private use. For private use. Therefore, now that is classified in accounting with the terminology called drawings. We are now going to transaction number 20. Only 3 transactions are left after this one. Received. If you received, you received. If you received, you received. Received how much? 14,000 rands. That was borrowed from LA Bank. LA Bank, Los Angeles Bank. Now we received 14,000. That was borrowed from the bank. In other words, we borrowed money from the bank. This is borrowing money from the bank. And we received the money we have borrowed. If you receive money, guys, you receive money. So if we receive money, we are expecting a plus in our cash or a plus in our bank because we have received 14,000. Because we received 14,000, then under our bank account, we need to say, here is our plus in our bank account. We received 14,000 rands. Where was this 14,000 coming from? It was a loan from a bank. Now they say a money that was borrowed from the bank. Money borrowed from the bank, we all know that is called a loan. Now in accounting, I think it's your page 19 in your textbook for the students that I am lecturing. Your page 19, a loan is a liability. A loan is equal to liability. Liabilities increase on the credit side. If you borrow more money, your liabilities will increase. If you are paying your liabilities will decrease. In this case, we borrowed more money. And because we borrowed more money, we are expecting that the loan, which is the liability, must be increasing on the credit side. But to take it back is to say we have received money. We received money from the loan that we borrowed. So our description account becomes a loan. Now let us go and we say we received money in the bank. Where is this money coming from? It comes from the loan. That's it. Loan is the accounting description for money that is borrowed from a bank. It is still a liability. And as I mentioned, that liabilities increase on the credit side. Remember now, I'm recording on the bank side. We have received money and our money must increase by 14,000 because we received money. But we need to explain the money that we have received and say we have received 14,000 from where? From a loan that we have taken from LA Bank. In other statements, we give the details when we do subsidiary journals for the main accounting students. We say loan LA Bank so that we give the full details. You can also say loan from LA Bank. So that is clear that this loan was from LA Bank because companies can borrow money from different companies. So now in this case, we are very, very, very clear that this loan is from LA Bank. So we are recording this under the bank account. Please be clear. We are recording this under the bank account. This is the bank account. Bank account, we recorded 14,000 on the plus side. Description is a loan. Now we need to recognize or open an account called loan. Remember, I said that a loan is a liability. So we need to record our liabilities. We say loan. We need to recognize in our book that we are owing LA Bank. Loan LA Bank. We need to acknowledge that we are or record in our books that we have a liability that is from LA Bank. I mentioned that a loan is a liability and liabilities increase on the credit side and they decrease on the debit side when we pay them. So now in this case, our liabilities, meaning people we are owing them money, are increasing by 40,000. Why? Because we have taken money from them. Remember, for every debit entry, there should be a credit entry. If 14,000 is on the debit side of bank and the description is loan, that means 14,000 must be on the credit side of loan and the description must be bank. If 14,000 is on the debit side of bank account and the description is the loan, that means 14,000 must go on the credit side of the loan and the description must be bank. That's what it means to say for every debit entry, there should be a credit entry. Very simple accounting principle. Very, very, very simple accounting principle. Now, continue in that exciting, lovely note. We go now to number 23. Received. We have received 4,000 for rent. If you have received, guys, you have received. You have received money. You have received money. If you have received money, we expect a plus in our bank account. Money can't be transferred to your account and your bank account remain the same. We have received 4,000. For what? For rent. So if we received 4,000, our bank account must indicate that we have received. How do we indicate that we have received money in the bank? We record it on the left-hand side, meaning on the debit side. We have received 4,000, then that is 4,000 on the debit side, plus in the bank account. Where is this money coming from? This money is coming from a rent. That becomes our description. Therefore, now that means this rent now, it is income. It is rent income that we are receiving. Money in the form of rent. Received 4,000 as rent income. Then now for every debit entry, there should be a credit entry. Then now in this case, that means 4,000 will be recorded on the credit side of rent income. And the description will be bank. 4,000 will be recorded on the credit side of rent income. And the description will be bank. Remember, incomes increase on the credit side. Incomes increase on the credit side. Let us check if do we have any rent income. There we do have rent income. I did not indicate that incomes increase on the credit side and they decrease on the debit side. So now if incomes increase on the credit side, do we now have more income in terms of rent, the answer is yes. We have received 4,000. So if 4,000 is received, then our income, which is rent, must increase. Then now that will be, why is our income increasing? Is because we have received money. Remember I said on the credit side of rent income, we are recording 4,000. Description will be bank, where rent income was debited. Now we have dealt with this one very lovely. For every debit entry, there should be a credit entry. So we said here received 4,000 for rent. And you can see in here, they don't specify cash. They don't use the word cash. Obviously, if you receive money that you borrowed, that means obviously this is cash. And they can use, remember I mentioned the word EFT. If we have the word EFT, that means money was transferred via electronic fund transfer. So the terminology of EFT, which normally appears in your subsidiary journals, is also applicable in here. Nothing changes. Though there's no cash, but we know that we received. You can't receive and there's no cash involved in the case of these transactions. Now we have rendered services. Services rendered for cash. Services rendered for cash. Now how much did we render the services? 15,000. That means we rendered a service and we received money, in other words. Or EFT was received for services rendered. We can still say so. EFT was received for services rendered, meaning we receive money via electronic fund transfer for services we have rendered, which is obviously cash. Now, services rendered for cash, 15,000. If we received cash for services that were rendered, we must show it in our bank account that we receive money. Where do we receive money in the bank account? We are receiving money on the debit side of the bank account. So that means the amount of the services rendered of the entire 15K, which I wish I can have it now, will be recorded on the debit side. Then now we then have to say, we are increasing our bank account. Why did we receive money? Where is this money coming from? It's because we rendered services. It's because of services rendered. That's why our bank account is increasing. If you look in the first one, our bank account increased. Why? Because the owner contributed money. Second one, our bank account increased because we received money from the loan. Third one, bank account increased. Why? Because we receive money from the rent. Fourth one, bank account is increasing. Why? Because we receive money for the services we have rendered. So on the credit side, our bank account is decreasing. Why? Because we paid the telephone. Credit side, 1,200, our bank account is decreasing. Why? Because we paid for water and electricity. So it's very simple, and for all these debit entries, they are credit entries, and for all these credit entries, they are debit entries. If we look in here, this 1,200 is recorded on the debit side of telephone, and the description is bank. And this 1,540 is recorded on the debit side of telephone. This was water and electricity. On the debit side of telephone, and the description was bank. This 1,200 was recorded on the debit side of water and electricity, and the description was bank. And the description is still bank. Now, hope I'm not over explaining. We were still busy with the services that were rendered, and we said we received money, and we indicated that money has been received, and this money was received from a person whom we rendered our services. Then after they paid us for the services we have rendered to them. Now that means 15,000, let me repeat that one, 15,000 will be recorded on the credit side of services rendered. And I hope you see, though it's on the debit side of bank, but 15,000 will be recorded on the credit side of services rendered, and the description will be bank. But on this side, I'm saying 1,200 was recorded on the debit side of water and electricity, and the description is bank. Now let us do the same thing. Here is our services rendered account, 15,000 rands on the credit side. For every debit entry, there should be a credit entry, and description is the name of the account where it was initially or first recorded. Now we continue on that same note. Now we have recorded the 15,000, which was our last transaction. 30 marks of this question, and it's a must grab 30 marks this one. If you were to get any question on ledger account and it's 30 marks, it's a must grab. The entire 30 marks sorted on your side. Now we come to the last transaction. Last transaction, we paid. If you pay, guys, you pay. If you pay, that means bank is decreasing on the credit side. If you pay, money must decrease. It can either say EFT to salaries and wages or wages. EFT, remember, is indicating money either going out or money coming into the business. So now in this case, we have paid. If we paid, we can just simply say paid, meaning we paid, bank must decrease. And bank is decreasing on the credit side. How much did we pay? How much were our salaries that we paid for? It is 40,000 grand. That is 40,000 grand. Now we paid. Who did we pay? Or what did we pay? We paid for salaries. We paid for salaries. How much? 40,000 rands. Therefore, now that means 40,000 rands will be recorded on the debit side of salaries, and the description will be bank. Why I'm saying on the debit side is because salaries are on the credit side of the bank account. For every credit entry, there should be a debit entry. Salaries are credited under bank account, or bank is credited by salaries. Therefore, salaries will be debited by bank. So now we need to say, do we have a ledger account called salaries? We don't have it. We don't have salaries ledger account. Then we need to open a ledger account called salaries. Now let us open the ledger account called salaries. Then now under salaries is an expense. We know that. Because salaries are expense, you will always be recording on their increasing side. And salaries increase on the debit side. Therefore, the 40,000 will be recorded on the debit side where the expenses are increasing. And the question will be, how did we pay them? We paid them by cash. And that comes from the bank account. Remember, I said 40,000 will be recorded on the debit side of salaries, and the description will be bank. For every credit entry, there should be a debit entry. With those words, guys, you've been wonderful listeners. We have now closed. We have done the last transaction. I want to highlight from the requirements that we are required only to balance the bank account. We are required to balance only the bank account. The rest are not a requirement to balance. What does it mean to balance the bank account? And I have a very limited space under the bank account. Now, balancing the bank account means we are writing the total. That means we are writing the total. We draw a line here and we draw 2 lines in here. We write the total of the bigger side. And these lines must be in the same line. This one must be aligned. Then we write the total of the bigger side. The bigger side is likely to be the debit side under bank. 194,160 plus 120,000 capital that was contributed by the owner, plus 14,000 rands, plus 4,000 rands, plus 15,000 rands. Then we have 347,160. 347,160. Then we minus the smaller side. You write the total of the bigger side, and the bigger side is the left-hand side of the debit side. And that total, you write it both sides as I've written, with the two lines in between or at the bottom. Then we minus the smaller side, minus 15,000. Remember, the smaller side is the payment, in this case where money went out. 1,540 minus 1,200 minus 40,000 rands. Then the difference, which is 304,420, is the balance. So this is the balance after we received the money we have received and after we've made payments. Then we bring this balance here to the other side, the opposite side. Then it will be, sorry to disturb the services rendered ledger account, 304,420. But please give more space for bank account. It normally requires more space, as I mentioned before. Then this will be a balance brought down or brought forward. So that is how you balance an account. So now that will be it was the requirement for bank. And I want to emphasize the fact that there is another topic called the trial balance. Trial balance, you are given ledger accounts. In the trial balance, you are given ledger accounts. And from the ledger accounts, you are transferring these transactions into a trial balance. Totalize balance into a trial balance. Totalize into a trial balance. And I will be using the same ledger accounts that I have to draw a trial balance for you. So when I teach the trial balance next recording, it will be based on the same ledger accounts that you already know, so that we know that we just need to totalize. In other words, in the trial balance, you will be given ledger accounts with the recordings already there, meaning the recordings will be already done for you, Then now the only thing you need to do is to record and transfer bank under a trial balance. Then the question will be, what is a trial balance? A trial balance is very similar to this information that was provided. A trial balance is like this table that we're given. But what is different about a trial balance is the fact that we have two columns. There's a column for debit, there's a column for credit. So what do we do in the trial balance? We take the ledger account and say, oh, the bank has a debit balance at the end of the year. We take that bank 304,440. We come in the trial balance. We say bank. Then under bank, we will erase this and say 204,440. That's what we do. After we go capital contribution. Capital contribution increases on the credit side. So the amount of the capital contribution will go on the credit side. We'll need to check and say, where is our capital contribution? Where is our capital contribution? Let us check if did we have a capital contribution. Yes, the total capital contribution. I'm just summarizing the next topic. Total capital contribution will be 340,000 rands plus 120,000 rands plus 40,000 rands. Total of the capital contribution is 500,000 rands. Is on which side? We know that capital is increasing on the credit side. So we take the total of 500,000 rands. What do we do with it? We transfer it on the credit side, 500,000 rands. So this is what a trial balance is. You write capital as is, then you go to land and building. Land and building is increasing on the debit side. We keep this one as is because there was no other land and building. Drawings are increasing on the debit side. We ask ourselves, how much the total of our drawings? It will be 2,000 plus 1.5. This will give us 3,500. Then under your drawings, what do you record? Drawings, it will be 3,500 because drawings increase on the debit side. So this is what is called trial balance. It's very easy. From ledger account, you transfer the total. From ledger account, you transfer the total. And this is a question that you also need to master, which I will record it using the same recording of the ledger account that I've done in here. Sorry to take you forward, but we are thinking ahead. With those words, thank you very much. I think I have covered all that I needed to cover. I think very lastly that I still forgot the dates, as I mentioned to you. For every transaction, you record your dates. For every transaction, you do not forget to record your dates. Record your dates accordingly. More especially when it comes to the dates of the salaries, water, electricity, telephone, capital, loan, rent, income, services rendered, you write the dates in there. Even if it's just the numbers 0404, whatever the year is. And all the dates throughout, they are very important so that we know when did each transaction take place. If it was the 14, write 1406, whatever the date of the transaction is. In our case, our transaction date, they were different. We had different days. We had 4th of the month of May, 7, 13, 14, 19, 20, 23, 28, and the last one was on the 30th. So these are the dates I'm referring to. It will be 30, 04, 23 or 2023, however you write it, 23. So that's all that we need in terms of the dates. With those words, thank you very much. That was the summary of the ledger account and introducing you to the trial balance at the same time. Thank you very much. Wait for the next recording on the trial balance.